Hi guys, I'm still in Spain. Yes, as you can see, this is just a street in Madrid, and don't live here. No, I'm here on holiday just to celebrate New Year. But even if it is New Year, I'm thinking about my investing plan for 2022, and this is what this video is about. So, let's get started on that. It's now time to look at 2022. 2021 is obviously finishing, and my goal is in 2022 to buy myself a house, my very first house that I buy, to live in it. Now I've been renting, and so the goal is to kind of minimize the risk that you have when you are invested. Obviously the stock market can go up, market can also go down, and so you want to make sure that when it's time for you to use that money, and my goal has always been to buy myself a house to start with, well, that you have as much profit as possible. And so these are my circumstances and what I want to achieve in 2022. So if it is not the case for you, and if you are investing for the long term, which is, by the way, always the best thing to do. If you invest with the goal of making money and using that money in 5 to 10 years, yes, that's the absolute best thing to do all the time. But if you are like me, then let's carry on in this video because it can be applicable to you as well. So there are two things that I'll be looking at in 2022. Two events that will decide what I'm going to do with my investments. The first one is lockdowns, because I'm expecting a lot of lockdowns, especially here in the UK. I'm pretty sure that they will be announced as soon as basically as soon as we get over New Year's Eve, and probably on the 1st or maybe 2nd of January, because basically, because of the Rona, it's very likely that they will look at just simply imposing more restrictions, and that will have a very big impact on my investment. So I've got a pretty big position on oil and also a lot of stocks. Obviously, if you are subscribed to this channel, you will know that. So both oil and stocks are incredibly connected, as you know. And so what I would be more concerned about for the lockdowns is actually my oil position, because the oil price, as happened in 2020, can go down quite quickly because of the lack of demand for people just working from home. So what I've already done, actually, I've taken profit on my position that was up at 130%. And what I'm thinking of doing, if the price goes down even further, then I will either, depending how much it goes down, because it can really crater in just a matter of days, I'm thinking of buying the dip using the profit that I took already. So that way we know that basically my position will be profitable, basically, and we know that oil is not something that we can move away that quickly. We've realized that even though Tesla is getting lots of traction, electric cars are becoming more relevant and more basically important as days go by, but still we still need oil, we still need gas, we still need methane, and that's another story actually. But yeah, we still need fossil fuels basically. And so this is the first thing that I'm looking at, lockdowns. And if you are subscribed to this channel, I'm gonna give you updates on the lockdowns and what that means for the stock market and for the stock market crash. Now, the second thing that I'm gonna really keep close attention, close tabs on, are basically the Fed and the Fed tapering. So the Fed tapering and the Fed, again, interest rate increase. So a few dates that you should note down right now. In January will be an incredibly important month. And some people think that January might be a great month for small cap stocks because they've been beaten up so badly in the last quarter, I would say even in the second half of 2021. And so they think, well, maybe January 2022 will be a good time for these stocks to bounce back up. Well, what I'm thinking is no, it shouldn't be. It won't be. I'll go out on a limb and say no, it's probably not yet the moment. We are looking at 1, 2, maybe 3 years from now. That's my guesstimate for stocks that are not yet profitable and for stocks that do not have a path to profitability. That's kind of where we are now, I think. But looking at January, because that's what you're probably more interested in, couple of dates. The CPI, so the CPI is the inflation data that is used by the Fed to make decision on inflation. So CPI on the 12th of January. I'm gonna obviously make a video update when that number comes out, but it's very important to understand that when that figure, well, even in the few days before the CPI comes out, we'll probably see the market becoming very choppy and potentially going down, because obviously we know that inflation is the key driver now in 2022. And so by just waiting, like the market has become quite, let's just say, not too eager to go to the all-time high. I would expect it. We have started a bit going sideways. You can see that if you pull up the SPI, so the S&P 500 on any I don't know, on TradingView, on any screener, and you can see that in the last few months we've started going a bit sideways. And again, we've been hitting all-time highs, that's true, but we are not like doing it with the same, let's say, with the same frequency that we used to have at the beginning of 2021. So the second date that you absolutely need to keep in mind, and this is the big deal, guys. The big deal is the Fed meeting on the 25th and 26th of January 2022. Now, this is definitely for certain in a few days before, maybe even the week before this meeting, based on what we get from the CPI data, I am sure that the Fed, basically the market will be incredibly choppy, will probably go down. Money will be taken out of the stock market because, well, just to basically then do something when the Fed basically comes out with the next actions. It's very likely that this time the Fed might even decide to taper very quickly and say, okay, instead of finishing in March, which is their latest estimate, we'll say, no, the last month will be February, which would also tie with what happened in 2021. That's kind of ironic that in 2021 we saw, in February 2021, we saw the massive spike and then all this like going down. So it kind of, yeah, it sounds like it could be a repeat from what happened last year. So from my portfolio point of view, from a stocks point of view, my biggest position by far was Tesla. So I was up 100%, so I took some profit there as well when we hit the all-time high back in November. So I took some of that out of the table, and I'm just running basically with the house money. What I'm thinking is that it is better, and in my case that is the case, if you are already invested in the market and you are in a profit, to keep it there, to not like take out your money, especially if you are in big stocks, in big tech stocks. So I'm talking about Apple, Google, Tesla. Obviously, Amazon hasn't been doing much, to be honest, Amazon since August 2020. But anyway, these stocks are very stable, and it's better for you to stay in the market because you don't know where the market is going with absolute certainty. On this channel, I make video updates like this one, and so you can get an understanding of what their future holds. But, you know, you need to always, it's better for you to stay in the market. Well, thank you for watching, and I'll see you in my next video update on the stock market. Thank you.